Hello everyone. It's me, NYSE Einstein from the Florida New York Stock Exchange. Friday, February 16th. This was the week that was. We're here with Kelly Evans, ladies and gentlemen. Anyway, I'm burnt. I'm tired. We have a long weekend coming up. This has been a really, actually a ruthless week. I didn't have a particular edge on the market. This market has rallied back. Every retracement. So let's go back a week. Let's go back a week in the different phases from to. We've got it all in 1 week. Market sold off and reacted to the catalyst, which was the fear of inflation and tightening of interest rates, raising of interest rates, tightening of money supply. You know, it's like a whirlwind. My head is just spinning. I have a really bad headache. It's been so hard. We saw the market basically from a week ago when we chatted, that catalyst that sold the market off, which was the employment number and the wage growth and the inflation fears and the fear of raising interest rates, and that started the sell-off in the market. We saw the market sell off basically 10% from the highs. It was some emotional selling, some economic data-driven selling, some taking profits, a lot of everything. Okay, but we saw volatility come back into the market in a huge way. We saw a sell-off in oil, we saw a rally in oil. We saw a sell-off in gold, we saw a rally in gold. We saw $1.2 billion volume almost every single day. And then we saw the whole thing turn around when there was actually not a lot of follow-through, past 10% down. We saw it hit 200-day moving average breakthroughs. We saw a lot of technical reasons to buy back into the market. We saw some short covering. We saw people realize that, you know what, this thing, 2,600 points in a market that's up 7,000 is actually an actual retracement from exactly a year. 10% retracement of a year ago. That's a technical support level. They started to buy them, and there was just the buyers beat out the sellers. We started having days where we were having higher lows, and we were building back up. People started walking back up that stairway. Okay, the train was chugging itself way back up, and as we go up 400 or 500 points, huge volatility, huge reversal days, where the market would open down and rally back. We saw people basically finding and catching a bid in the marketplace. Right? The buyers won out on this one. The sellers seemed to be done. They stepped away. The buyers were here. The volatility stayed, but the buying stayed and came back. Fresh money coming in, short covering being done, and buyers starting to buy stock, right? A technical retracement of 10% seemed like a reasonable place to buy some bargains. If you liked Apple at 177, you surely liked it at 155, right? So you've got so many different people in the market, so many different people betting on technical analysis, so many people taking support levels and taking resistance levels and getting in where they needed to do. The S&P was trading volatilely like crazy. The VIX and all those names were trading crazy. ETFs were on fire, trading hundreds of percent out of whack, right? And that was bringing huge volatility in the market, money changing hands, stocks changing hands, rotation in and out, and you saw basically the buyers winning out. Well, what happens in a market rebounds of 500 or 1,000 points? Those who are sitting around waiting, the real patient guys were waiting for that, you know, or the real negative guys were saying this thing's coming in 5,000 points, realize, you know what, it's not coming in. Stop the madness. The selling stop. Right? When you got down 2,600 and you rally back 1,000, it's like, holy moly, what am I doing? I'm going to miss this boat once again. Those are some of those crazy people who stood around waiting for this market to break for the last year as it went up 7,000 points. So they started buying in. So you had the technical guys buying it. Basically, as I told you during the sell-off last week when we spoke, was the fundamentals haven't changed. We had a bit of an economic catalyst to the sell-off, and it made sense. And then there was an emotional follow-through, absolutely. And there was profit-taking, absolutely. But the fundamentals never change. We learn that on a daily basis here. And now what that means is it's time to put your money back to work. It's time to get a shopping list. It's time to try and get some bargains while they're still there. We've now retraced almost all the way back. We're at 25.2. We've rallied back a couple thousand points, almost. We're at 23.3. We're back 2,000 down from 26. We're at 25.2 again. You know what? I may have to wear my 25,000 out, which I thought I would never wear again, even though I kept telling you to stay in it. Right? 25,000. We're back there within a week. right? So all the frowns and murmurs and crazy of the other day are gone. We're back in the mode. This is fine. There's probably another 1,000-point rally coming up. There are no signs that this sell side is going to come back. There are lots of signs that the buyers are still in the market, and the market seems firm. It seems strong. Oil back up a quarter years back up. It was down at 58.5. I called that low actually, which is not a bad thing. I said to you, it feels like it's firming up. I didn't predict it. I just told you what I saw, that at 58.5, we'd retrace it back from 64 and change. Another 10% sell-off, which tends to be a support level here, back up to 61.5. Stick with me. Stick with NYSE Einstein. Best in breed, best in show, living the dream. Stop the madness. I love you all. I'll see you on Monday.